Your broker app is lying to you, not because it wants to, but because it's showing you the wrong number. You open it up, see a little green percentage and think, nice, I'm up 10%. But that number, it's not your real return. It's just a simple price change. And here's the scary part. Most investors don't even know that. So in this video, I'm going to show you why that number is wrong, the different ways portfolio returns are actually calculated, and the method that gives you the real truth about how your money's performing. By the end, you'll understand this better than 99% of investors, and you'll never look at that little green number the same way again. Let's start with what almost every broker does. They show you a simple return. You bought it at $10, now it's $12, you're up 20%. Sounds good, right? But that's not how investing works. Because most of us don't just buy once and walk away. We add more money later, we sell parts of a position, we earn dividends, we reinvest. None of that shows up in that simple little number. If you added money halfway through the year or sold part of it after a drop, that simple percentage completely falls apart. It's like judging a marathon runner by the last 100 meters. You're missing the full race. Here's why this matters. If you don't know how your return has really been calculated, you can't trust what it's telling you. And if you can't trust the data, you start making emotional decisions. You think you're doing great when you're not, or you think you're losing when you're actually ahead. Over time, those little misunderstandings cost real money. There are four main ways portfolio returns get calculated, and each one tells a different story. So let's break them down. Number one, the simple price change, what most broker apps show. This one's everywhere. You buy a stock at $10, today it's $12, your app says you're up 20%. It's quick and easy, but it only looks at price movement. It ignores when you added more money, any dividends you earn, any withdrawals you made, and how long your money was actually invested. And if you added cash halfway through the year, that 20% doesn't really mean much. It's like checking the scoreboard halfway through the game and thinking the result's final. Number two, time-weighted return, the fund manager metric. This one's common in professional reports. It removes the effect of cash flows completely. So it answers the question, how did the investment itself perform, not how did I perform with my timing and decisions. And that's great if you're rating a fund manager because it measures their stock picking skill without being distorted by investor deposits or withdrawals. But for individual investors like us, that number can feel pretty disconnected. You might have invested more money at a bad time, but TWR ignores that. It pretends your money was there the whole time. So it's clean maths, but it's not your reality. Number three is the money-weighted return, or IRR, the mathematician's version. This one includes all your deposits and withdrawals, so it's much closer to the actual truth. It measures how your actual money grew, taking timing into account, but there's a catch. To calculate it, the formula has to guess over and over to find the single rate that makes all the numbers line up. It's powerful, but it's also a black box. You can't verify it yourself. You just have to trust the software got it right. So IRR is accurate in theory, but for most investors, it's hard to trust something you can't actually check. Number four is the modified diets formula, the sweet spot. This one sits right in the middle. It's accurate like IRR, but transparent and simple enough to understand. It looks at your actual dollar gains or losses, then divides that by your average invested capital weighted by time. So if you added money halfway through the year, it only counts for half the period. You can check it, understand it, and trust that it reflects your real investing behavior. And that's why a lot of serious tracking tools, including Navexa, use a version of the modified diets approach. It tells you the story of how you invested, not just what the market did. And keep in mind, this is only talking about how your returns are calculated. Most broker apps also skip parts of your actual performance, things like dividend income, currency movement, and total return. So even before the maths, you're already missing key pieces of the story. So what makes the modified diets approach so good? It measures what really matters to an investor, the impact of your timing, your cash flows, and your patience. If you invest during a market crash, you'll see the reward for that decision. If you buy high and sell low, you'll see that too. It's not about punishing you, it's about showing you the truth. It's honest maths that keeps you accountable. Now you've seen all four, you can probably see why most investors are confused about performance. If your broker shows a simple price change, you're missing the full picture. If it uses a time-weighted return, you're seeing how the investment performed, not how you did. If it uses IRR, you might have a precise number, but no idea how it was calculated. Modified diets gives you the balance between truth and transparency. It's clear, it's realistic, and it reflects how you actually invested your money. Now, if you've used Navexa, you might have noticed we use a modified diet style calculation. And that is not by accident. We chose it because it's the most practical and fair way to measure how real investors perform over time. It includes your decisions, when you invest, when you take profits, when you reinvest dividends, but it's still simple enough to understand. It's transparent, it's verifiable, and it's conservative. It avoids inflating your numbers when you sell or withdraw. And you can even switch between simple and CAGR, compound annual growth rate. Simple for quick comparisons, CAGR for your true annual compounding rate. Both are honest, both build on the same foundation, the modified diets method. Here's the bigger picture. When you understand how your returns are calculated, you stop guessing. You can look at your results and know, this is what really happened with my money. You see the difference between market performance and your performance. That knowledge builds confidence. It helps you make better decisions. Keeps you focused on the long game, not daily noise. Because investing isn't about chasing numbers that look good, it's about building numbers that you can trust. So next time you open your broker app and you see that little green or red percentage, remember it's not telling you the whole story. It's showing you a piece of the picture. And for most investors, that piece is misleading. If you want to understand how your money really performed, how you performed, you need a method that reflects reality. That's what the modified diets formula does. It's not hype, it's not hidden, it's just honest maths. Once you see your portfolio through that lens, you can't unsee it. You'll realize most apps aren't lying on purpose. They just weren't built to tell you the whole truth. So if you want to see your performance calculated the right way, check out how Navexa does it. We built our tracking system on the modified diets method because investors deserve numbers they can trust. But even if you never use Navexa, at least now you know what that number in your app really means. And that alone puts you ahead of most investors.